Hi everyone. So let's get the session started. We welcome you all to the 22nd session of Zen Tax Talks, wherein we will be discussing on a very important and a very interesting subject in GST, which is with respect to input tax credit. So the entire purpose of bringing the GST law and the major benefit for the trade and industry through the introduction of the GST law has been the seamless claim of input tax credit. In the pre-GST scenario, wherein there were multiple taxes, there was no free flow of credit at all. The value-added tax which was paid by a manufacturer or a trader was not eligible to be claimed as input tax credit by a service provider. Take, for example, the case of a chartered accountant when we purchased a paper which was not eligible for input tax credit as a service provider. This was the scenario in the pre-GST era. The introduction of GST gave the benefit of seamless benefit of input tax credit, and therefore, whether you are a manufacturer, a trader, or a service provider, you would be eligible to claim the benefit of input tax credit on all the goods or services used in the course or furtherance of business. Section 16, subsection 1 provided for this benefit on all goods and services used in the course or furtherance of business. Section 16, subsection 2 provided various conditions subject to which this benefit under section 16, subsection 1 can be claimed. Though section 16, subsection 1 provided the ITC on all situations, section 16, subsection 2 very categorically said that input tax credit can be claimed only subject to fulfilling of these conditions. So this is something which was discussed in the previous session, part 1, and I would like to just touch base on those important aspects which was discussed in the part 1 of the session for the benefit of those who could not attend the session for various reasons, and just as a quick revision for those who still attended the previous session. So just to very quickly take you through that part of the discussion. So what are the conditions for availment of input tax credit? One of the first and the most important criteria is you should be in possession of a tax invoice. The law does not very specifically provide whether it has to be a soft copy of an invoice or a hard copy of the invoice. Section 16, subsection 2 provides that you need an invoice read with Rule 36, which provides that input tax credit can be claimed on an invoice if it contains certain specific criteria. A tax invoice needs to contain n number of particulars, but for claiming input tax credit, even if there are only selected details, still it would entitle to claim the benefit of input tax credit. So the main subject with respect to input tax credit is that you should not be denied that benefit. There are certain specified situations where input tax credit is outrightly ineligible. That is something the core focus of today's discussion, which is about blocked credits, which is provided for in section 17, subsection 5 of the CGST Act. But for an input tax credit which is duly eligible, how do you substantiate to the department that the input tax credit is clearly eligible for you? So that is something which we are touch basing with respect to section 16, subsection 2. An invoice is to be contained in your possession for the claim of input tax credit. And if the supplier's turnover is in excess of rupees 5 crore, he or she, that such supplier shall be eligible or required to generate an invoice in the e-invoice portal, which shall contain the e-invoice number and the ARN number, the e-invoice acknowledgement number. Right? So the IRN is required. So it has to be an e-invoice. Otherwise, this will not be treated as a valid invoice under the GST law itself. One more important condition, which was not there at the enactment of the GST law, got subsequently introduced, is with respect to that input tax rate which you are eligible to claim should be reflected in your GSTR 2B. GSTR 2B is a statement which is reflected based on the filing of GSTR 1 by your supplier. So the invoices which are reflected in your GSTR 2B is eligible for input tax credit, also combined with the condition that you need to have a tax invoice. Merely because the transaction has got reflected in your GSTR 2B will not entitle you to claim the benefit of input tax credit. all the conditions specified in section 16 subsection 2 have to be cumulatively satisfied. Number one, we already discussed about possession of a tax invoice. Number two, we are also specifically talking about such invoice being reflected in GST 2B. Now, an obvious question would arise. What would be the situation for those periods before the enactment of the section 16 to AA, which provided for this requirement of claiming ITC based on GST 2B? So GST 2B came into effect from the period in 2021. From 1/1/2022, the Act has been amended. Section 16, subsection 2 has a new clause AA, which provides that input tax credit can be claimed only based on GST 2B. For the periods before that, that is up to 31/12/2021, you can take the benefit of circular number 183/circular number 193, two different circulars, which provides that if your supplier has paid the tax and you are able to get a supplier certificate stating that the supplier has duly paid the tax, then you would be eligible to take input tax credit. If the difference between you and the supplier is more than rupees 5 lakhs, you get a certificate from the chartered accountant of the supplier, then your input tax credit is also eligible. Other conditions are receipt of the goods. As I already said, just because an invoice is reflected in your GST 2B, you will not be entitled to take input tax credit. Very commonly, this can arise of transactions relating to the month end. An invoice is raised by the supplier on the 30th of March. The goods are received by us as the recipient on the 5th of April. The invoice is duly reflected in the GSTR 1 of the supplier in the month of March, which is also reflected in my GSTR 2B of the month of March. Can I take input tax credit of that invoice in the month of March? No. The law is very, very clear that you need to have received the goods or services for entitlement of the claim of input tax credit. Therefore, the input tax credit, though it is reflected in GSTR 2B, shall be claimed only in the month in which it is received. Other conditions is the tax should have been paid to the government by the supplier. He should have filed his GSTR 3B. So how will the department be able to verify whether the goods have been received or not? E-Wayable today is a very, very easy document which the department believes that to actually verify the actual date of receipt of the goods or services. Other conditions, supplier is paid to tax to the government. He has furnished it. I should have claimed the input tax credit in my return. I need to make payment to the supplier within a period of 180 days. So now going deeper into the subject for discussion, which is about blocked credits. Is blocked credits only a theoretical concept or is it very practically applicable? Blocked credits is very much a practical subject, and we have a very specific field in your form GSTR 3B, which is the monthly return which we have been filing every month. I have been very much remarking in the various sessions that the hero and the villain of GST entire law has been GSTR 3B. The reason being, in the very beginning of the enactment of the GST law, GSTR 3B was not originally envisaged. Since GSTR 1, 2, 3 could not be ready, the hero came, GSTR 3B. And if you really see the innumerous notices today, you can very well come to one common point. I'm very sure with this large number of audience present here, you would all come to a consensus that the major reason for all these notices is GSTR 3B. It was a very beautiful form which allowed any value to be entered. My value of outward supplies in GSTR 1 was rupees 10 lakhs. There was one supplier who entered his value as rupees 1 lakh in his GSTR 3B. Because GSTR 3B allowed all such values. So the hero which was allowing all these values has become the villain today, giving rise to all these notices in the GST law. So it is very, very important that we file the GST returns or the particularly GSTR 3B very, very correctly. And with respect to which here we would like to really emphasize on this very important field in GSTR 3B, which is table number 4B1. 4 Bombay 1 talks about reversal of input tax credit which is reflected in your 2B but which is not eligible to be claimed by you. Or not all input tax credit which you have got reflected in your GST 2B is entitled for availment. We will be discussing very much in detail about the provisions of section 17 subsection 5 which talks about blocked credit. This blocked credit is what we call it as permanent reversal under the GST 3B. So when it calls as permanent reversal, the invoice would have got reflected in my 2B. Say for example, I have purchased a car. I am sure Jay Mohan was discussing the previous session about the input tax credit eligibility with respect to car. Swift Desire, a car which is having a seating capacity of 4 passengers, that is less than 13 passengers, is ineligible for claiming input tax credit. This invoice is reflected in your GST 2B. That value would be auto-populated in 4A5, all other ITC. Because whatever is there in 2B is auto-populated into 4A5. Sir, I have an invoice, sir. I have received the car in the month of March itself. I have also put it to use for the purpose of Income Tax Act. The invoice is reflected in your GST 2B. Can I take input tax credit? No. Because it is very clearly given as a blocked credit under section 17 subsection 5. Therefore, this amount needs to be shown in 4A5 and reduced in 4 Bombay 1. That is the most important aspect of reducing the blocked credit. Therefore, blocked credit is not just a theoretical aspect, but it is a very, very practical scenario in every month of the GST return. So those items that we are going to discuss today, that we discussed in the previous session, that we will continue to discuss in the next forthcoming session, all 3 sessions together constitute the concept of blocked credit, and this is a very, very important practical concept which has to be properly understood and duly reflected in every month's GSTR 3B return. Therefore, to summarize, blocked credit has to be shown under 4 Bombay 1 of your GSTR 3B. So what were the aspects that we were discussing in the previous session? I will just quickly summarize in the next 1 to 2 minutes. That is, vehicles having seated capacity less than 13 passengers. Sir, I cannot say that I have purchased an Innova and our family being a joint family, we will always go as 14 passengers in my Innova car. No. We will only talk about what is the approved seating capacity and not the actual purpose or the actual usage of that vehicle. So the approved seating capacity of that vehicle being less than 13 passengers is not eligible for input tax credit. That is number 1. This is one chart which would have been very well explained. So whenever it comes to motor vehicles, the segregation has to be seen whether it is relating to transportation of goods or transportation of passengers. Here again, I will reiterate that it is with respect to the allowed usage of that vehicle and not the actual usage. Sir, I will purchase a Honda City car and I will always use it for transportation of goods. That cannot be the claim. A Honda City car is intended to be used for transportation of passengers or permitted to be used only for transportation of passengers. So a vehicle which is allowed, which is permitted and allowed to be used for transportation of goods, always eligible. If it is a vehicle for transportation of passengers, you need to further drill down to see whether it is having a seating capacity more than 13 passengers or less than 13 passengers. More than 13 passengers, outrightly eligible. Less than 13 passengers, then I go to further see whether it is used for making further taxable supplies. That is, I purchase that vehicle, purchase a car and sell the car. ITC is eligible. I purchase the car and I use it for supplying further transportation of passenger service. Then it is eligible. A driving school, eligible. In all other scenarios, a motor vehicle having seating capacity less than 13 passengers, input tax credit is not eligible. Once I decide that the input tax credit on vehicle is eligible, then the related services like insurance, service maintenance, all repairs will also be eligible. If the input tax credit on such vehicle is blocked credit under section 17 subsection 5, then the related services like general insurance, servicing, repair and maintenance are also blocked credits. So these are some couple of advanced rulings which should have been discussed during the course of discussion last week. Going to section 17.5b, here we will have with us today CA Akshara, who will be explaining more with you with respect to section 17.5c. But 17.5b, which was discussed in the erstwhile session, is also a very, very important section for discussion, which talks about a line of transactions which are all together ineligible, like food and beverages, outdoor catering, beauty treatment, health services, cosmetic or plastic surgery, leasing, renting, hiring of motor vehicles, life insurance, health insurance, membership of a club, health or fitness center, travel benefits extended to employees. So these are some transactions for which section 17.5b of the CGST Act very clearly provides that input tax credit shall not be eligible. But even in these situations, say for example, food and beverages, or the case of outdoor catering, the law very, very clearly goes to say that wherever it is obligated that the employer shall provide such services to the employee, then input tax credit shall be eligible. Say for example, a very real situation with respect to the Factories Act, which provides that a factory having more than X number of employees shall be required to maintain and run a canteen for the supply of food to the employees. In such scenario, though section 17.5b in its main provision restricts the claim of input tax credit, the proviso gives the benefit of such input tax credit in these very, very selected situations. So these are some of the very important aspects relating to section 17.5b. Then we have some important aspect and provisions relating to building construction. Whether or not it is eligible to claim input tax credit is a very interesting, debatable issue. And one important judgment lies before the Supreme Court. The judgment of safari retreats is yet to be decided before the Honorable Supreme Court, and we respectfully wait for the decision of the Honorable Supreme Court in this regard. But in the meantime, there are very, very finer nuances on interpretation of the word construction, on interpretation of the terms used in section 17.5c and 17.5d, for which we have our expert team member, CA Akshara, who would take you through this discussion. So at the end of the discussion, we openly invite you all to actively participate in the question and answer session and get your questions clarified. And we have started during the course of this week a very special initiative from Zentax Clinic, wherein we have our experts team providing one-to-one session for all the Zentax users for a 15-minute free discussion or a free clarificatory session. So here you would be asking questions in a group, but we have also enabled a very special initiative for our Zentax users for a one-to-one session. So you would have got that invite in your mailbox, you would have got that invite in your WhatsApp message as well. Or if you have not got the message, you can reach out to our admin who will be able to set that call for you. So Zentax Clinic, since the launch on 27th November 2023, we have just completed 150 days, and the journey in this 150 days has been nothing short of exciting. The journey in these 150 days has been very, very exciting, with many users getting onboarded. The feedback from the users has been very, very appreciative. So thing is, we are just expanding geographically. We are bringing in more features onto the portal. We encourage each of the participants in this webinar to use the services of Zentax Clinic. Come back to us with your feedback, because your feedback is what is driving us to build on more and more features. So use the portal, get back to us with your feedback, and we will continue to serve. And your active participation in the various Zentax talk session, the last 21 sessions has been very, very encouraging, and we continue to do this 22 sessions without a break every week. Has been really possible only and only with your feedback, with your support. So for any specific session that you need as well, you get in touch with us. Also, one more thing that I would like to remind you all about, the due date that got over yesterday, which was with respect to the filing of ITC 04. We already had a session with respect to ITC 04 that also was handled by Akshara, right? So ITC 04 is a return with respect to job work. So filing of return with respect to job work is of utmost importance. It is not about the penalty. Many people speak to me ask me, sir, the penalty is 25,000 or 50,000. Instead of taking the very difficult route of filing my ITC 04, as well I pay my penalty. But no, the consequence of not filing ITC 04 is not about the penalty, but that every transaction of goods sent for job work would be deemed to be a supply and you would be subjected to tax. Sir, whenever goods are being removed for the purpose of job work, it is being removed without payment of tax. But if you are not filing ITC 04, it would be deemed to be a supply and you would be required to pay tax. Therefore, filing of ITC 04 is also of utmost significance. If you have any clarifications with respect to ITC 04 or any practical difficulty or error in the filing of ITC 04, do get in touch with our team. They are always ready to support you to ensure due compliance of the GST provisions. So with this, I hand over the session to our expert team member, CA Akshara, who will take it forward with respect to the provisions in section 17.5C and 17.5B. We will take up the questions at the end of this session.
A very good afternoon, everyone. So today we had with us Arvind sir. He has clearly explained us and he has touched upon the blocked credits aspect clause A and B. So going forward, we'll have discussion pertaining to clause C and D. That is the most crucial aspect pertaining to construction of immovable property. That is the input tax credit, which is being blocked for the construction of immovable property. So it has been explained in the section 17.5 clause C and D. So let's go into the topic. So the clause C and D talks about works contract and the construction of an immovable property. So to go on to exactly what is the section talks about is works contract services when supplied for the construction of an immovable property that is other than plant and machinery, except where it is an input service for further supply of works contract service. So this is what the law tells us. So for easy understanding, let us break this into three. So the first will be the works contract services when supplied for the construction of an immovable property. Say if I'm constructing an immovable property, for that I'm availing the works contract services. So that we'll set aside as a part one. So part two is other than plant and machinery. So if I'm that immovable property is pertaining to any plant and machinery. So if it is pertaining to plant and machinery, that is not covered under this blocked credit. And for this, the plant and machinery definition is also given in the explanation, which we will discuss later on. And the third part, we can keep it as except where it is an input service for the further supply of works contract service. Say if I'm constructing an immovable property, but I'm itself a works contract service provider, but I am getting the service of another works contract, like a works contract service provider, say like subcontracting. If I'm a works contract service provider and I'm getting the service of a subcontractor, that will not be covered under the blocked credits because it is except where it is an input service for the further supply of works contract. If I'm supplying works contract services, that will not be covered under blocked credit. So this clause C, to put it in whole aspect. So if I'm constructing an immovable property and if I'm availing the service of a works contract, ITC is blocked. But if I'm a works contract service provider and if I'm getting the service of another works contractor, that is not blocked. And for plant and machinery also, it's not blocked. So this is clearly explained in clause C. With pertaining to go on to the clause D. The clause D talks about the construction of an immovable property that is also other than plant and machinery. So it goes on to tell goods or services or both received by a taxable person for the construction of an immovable property. And here also it is other than plant and machinery on his own account, including when such goods or services or both are used in the course or furtherance of a business. For example, say if I'm a businessman and if I wanted to construct an immovable property on my own, for that I'll be procuring goods and services for that construction. If in that case, my ITC is blocked, I cannot avail ITC pertaining to those goods and services that I've utilized for the construction of an immovable property. That is, say if I'm constructing a building, and even though if that building I'm using it for the purpose of business or for the course of business only, if I'm using it also, in that case also ITC is blocked for the construction of an immovable property. So this is the very plain reading of the clause C and D of section 17(5)(d). So for this, the laws provide us an explanation also. For this explanation to clause C and D tells us what is included in the construction. So for the purpose of this C and D alone, the construction includes reconstruction, renovation, additions or alterations or repairs to the extent of capitalization to the said immovable property. So if we see two of these clauses, that is C and D, it is basically with respect to the construction of an immovable property. So in this construction, the explanation goes on to tell it also includes all of this reconstruction, renovation, and additions if there is any alterations or repairs, and that too to the extent of capitalization only. So to this extent of capitalization is one of the debatable point, I would rather say. This we'll have a detailed discussion based on the advanced rulings as well. So this is about the explanation to C and D. So with respect to this extent of capitalization, when we see the GST Act or law, the term capitalization is not defined anywhere in the GST law. To the extent of capitalization, they just have used the phrase to extent of capitalization. But we have the definition for the term capital goods. Say if it is capital goods, once it is capitalized in the books, that becomes a capital goods. Only we have the definition for the capital goods, but there is no definition as such with respect to capitalization. So generally here the doubt comes, or obvious question that comes to our mind is whether if ITC is actually capitalized, whether if that is the material or goods that whatever we have purchased pertaining to the construction of immovable property, if we have actually capitalized those expenses, whether ITC will be available for that, or if we have not capitalized those expenses and we have accounted only as a revenue expenditure, even though if it is capital in nature, whether ITC will be available on that. So these are the two basic questions that pops up into our mind on the reading of this section, which we'll have a discussion in detail based on the advanced rulings. And further to this, if we see the section 17(5) after all of the clauses, there is another explanation which goes on to explain what is plant and machinery. As we have seen earlier, both these clauses C and D talks about the construction of an immovable property other than plant and machinery. So if it is other than plant and machinery, first we should be aware of what is included in the plant and machinery and what is excluded from the plant and machinery for the purpose of section 17(5). So for this, the plant and machinery, the law explains is, it means it can be any apparatus, can be an equipment, or a machinery that is fixed to earth by means of a foundation or a structural support. And it also includes that foundation or structural support that is used for making the outward supply of goods and services. So put it very simple, the plant and machinery, say if you're constructing a plant and machinery, the plant and machinery, say if you're constructing in any equipment that is that has to be utilized for your outward supply, that will be treated as a plant and machinery. And moreover, if you are creating some any structural support or foundation for that plant and machinery, and that also will be considered as a plant and machinery as per this explanation. But it also gives us an exclusions, that is 3 exclusions. If these exclusions are there, that will not be considered as a plant and machinery. So that exclusions are land, building, or any other civil structures. And if it is a telecommunication tower, and if it is any pipelines laid outside the factory premises, that will not be considered as plant and machinery. So if it means to tell, like if for the plant and machinery, if I'm constructing some civil structure to support that, that will be not considered as a plant and machinery because that comes under exclusion part. So here it is very crucial to understand the meaning of or definition of the plant and machinery for us to avail the input tax credit for the construction of an immovable property. So to understand this better and to get a clarity on the practical aspects, I've taken up the advanced ruling that have come recently that had a discussion or a question based on this plant and machinery. So one of such advanced ruling pertains to Gujarat. The applicant is Calaban Dyestuff Private Limited. So here I'll give you gist of the case, like what has happened. So here the applicant is engaged in the manufacturing dyes. That is, they procure raw material. They use their own machineries and just convert the raw materials, that is, which is in liquid form to a powder form, that which is basically dyes that is used in the textile industry. So they are engaged in the manufacturing dyes. So the applicant is generally engaged in the manufacturing dyes. So what they have done is to expand their businesses, they wanted to set up a factory. So they would have acquired a new land. And for the setting up a factory, obviously we require setting up of machineries and all. So for that factory, they would have to set up those machineries and equipments. They would have purchased some of the equipments which help them to run the factory. So as to say, that is, they would have purchased this sand mill, spray dryer, HAG plant, ETP, that is effluent treatment plant and all, and DG set as well. So the question that they put before the advanced ruling is whether to construct this factory or set up this plant and machinery, if I'm using this all of these equipments, if whether I'm able to avail ITC for that, or if it is covered under blocked credit. This is a basic question that they have put before the advanced ruling. So to put it like very exact, this is a question that they've asked before advanced ruling. So the thing is whether works contact services taken for structure on which machineries or fixed to earth by foundation and services taken for setting up plant. That is, they would have got this MS steel structure along with the roof to protect the machineries and all. For this, whether ITC is available, and they would have procured this TMT steel bars this there, right? So they've got the steel bars as well. And that would help them to provide the works contact services to lay up the foundation and all for that machinery. So whether for these two of this aspect, whether I'll be able to avail ITC on that or if it is blocked. So this was a question that was put before advanced ruling. I'll show you in detail like what are those equipments. I've taken pictures of that. So if you see that, you can get a basic clarity on that. What is that machine and what is blocked and what is that ITC can be availed. So put it in simple, these are the machineries that they've got. For this, they wanted to know whether ITC is available. That is, the first is sand mill and spray dryer. So the sand mill and the spray dryer in this particular case look like this. So I've taken the screenshot of this. So this equipment is basically it has to be customized for the machine to hold. So these machineries, if you see, they cannot stand alone. Basically, they need a structural support for that machinery to stand. So obviously, they have to construct the structural support. If you see, there is vertical as well as the horizontal support for this machine. And to the left side, you can see another support as well for the machinery. So to carry a load of the machinery, all of this foundation and this structural support is required. So for this, they want to know whether the applicant just wanted to know whether ITC is eligible for this. This is one of the equipment. The next is this hot air generating machine that is utilized in the process of this manufacturing. So for this, if you see this air generating machine, you could see this straight pillar and foundation that is goes down till the foundation, and there is a shed to protect the equipment. So this is basically air generating machine. So the temperature has to be set right for that. To protect the equipment, they have set up this shed as well. So ITC, if it is eligible for all of this, has to be raised. It is an effluent treatment plant. As we all know, this the effluent treatment plant is basically because of this pollution control road. So it mainly consists of all of these pipelines and tanks. So it is basically the civil structure. So for this also, they want to know if ITC is eligible. And this is an transformer. This we all know. For this as well, they wanted to know. So based on all of these pictures and all of these equipments, the advanced ruling authority has come out with this. So in respect of sand mill and spray dryer, they have come out like eligible and non-eligible things. So in case of this foundation and the structural support, so if you see here, as I've told earlier, there is vertical as well as horizontal support. So without this support, the machinery could not stand. So for all of this, the ITC is available. So all of this horizontal and vertical pillars in this foundation and all, ITC is available. But if you see to the left side, there is another support. So this is basically a civil structure. For this, ITC is not available because we all have seen the definition of plant and machinery that excludes the civil structure. So this the left-hand side part, that is which is basically a civil structure, for this ITC is not available. So this is with respect to sandmill and spray dryer. And for this hot air generating machine also, for this machine, what are this structural foundation is there? That for that ITC is eligible, but for this pillar and for this shed, which is basically another civil structure, for that ITC is not eligible. So this was a ruling that was given. So in case of this effluent treatment plant also, as we all know, this effluent treatment plant is generally pipeline, and that is basically a civil structure. So as this also comes under a civil structure, for this also ITC is not eligible. And for the DG sets is also ITC is not eligible. So this was the exact ruling that was given by the Gujarat. So here it goes on to tell that when the machineries are fixed to earth by means of foundation and the services are taken for setting up the plant is eligible. And for the ITC with respect to, as we discussed, the structure or shed that is erected on the left side of the sandmill, as you've seen earlier. And for the ITC with pertaining to this hot air generating machine, that is the shed, that is the roof, and it's supposed ITC is not eligible. And in respect of ETP and transformer, ITC is blocked. In case of this transformer, they've taken this, they would have taken this ruling of Tarun Retailers Private Limited, where in case it will be declared that works contract services is not eligible for making foundation on which DG set is fixed. So going on to that case, they would have given us a ruling that ITC is not eligible for a DG set. And with respect to TMT steel bar, which is eligible like for the works contract services which they would have utilized, that is eligible. So to sum it up, this ruling, if it is the foundation and structure that supports the plant and machinery, that is eligible. And if it is a civil structure and if it is a DG set or if it's an effluent treatment plant, for that ITC is not eligible. And with respect to that steel bars, which is used for the works contract, for that ITC is eligible. So this is with respect to this ruling. So going on to the next, we have another interesting ruling in the case of Jabalpur entertainment complexes. So this is the case of Madhya Pradesh. So in this case, if we see, the applicant is the owner of this mall. So generally, if you see, this applicant is only one GST, one registration, but they have 4 main operations. That is, if you see, they have this multiplex cine theaters. They have, if you have this cine theaters, they have this food court. They have this retail apparel store. And apart from this, as they own the mall, they get the rental income based on that. So based on this, they've raised questions to the advanced ruling. So in that, 2 of the most important question is the point of discussion now. So the questions that they've asked before this ruling would be, for generally, if in case of a mall, it is generally a commercial property. So generally, if we see, that is you have this normal wear and tear for any building. When it is compared to a commercial, when it is compared to a residential building, for the commercial building, you'll have more wear and tear, and frequently it requires the maintenance for the building. So for this purpose of maintenance, this applicant in particular, they would have purchased some of the maintenance stuffs for the building to be maintained, and they would have availed the works contract services as well. So for all of this, they wanted to know whether if ITC is eligible or not. So some of the goods they would purchased for the maintenance of building would be this tiles, this marble, granite, bricks, cements, paint and all, and for the sanitary items and toilet accessories and all. So for this, they want to know if this ITC is eligible. So they went on to the advanced ruling authority. So in the first sense, what has happened was, the advanced ruling authority straight away they have told that ITC is not eligible in both of the cases. That is, both for the goods purchased for the maintenance of the building as well as the works contract services, that is for the maintenance of the contract. So for both of the cases also, ITC is not available, was the ruling given at the initial stages. So here, what the applicant, what they did is, agreed by this, they went on to the appellate authority. So before the appellate authority, they have put forth their written submission. So in that, if you see, they would have told there is particularly with respect to capitalization, they would have taken their point. So here they would have told us for the maintenance of the building, there will be a lot of expenses. As we have seen, there will be huge expenses, and there will be like minor expenses as well, which will be capitalized as revenue expenditure in the books as well. So in this particular case, if you see, here they would have purchased this tiles, marbles, granites, and the sanitary items and all. So this and all they would have classified as revenue expenses in their books of accounts. So as the explanation here goes on to tell to the extent of capitalization, the applicant would be of the point that so those expenses which I have counted as a revenue expenditure, for that ITC has to be availed, right? So that was the point of discussion they wanted to put forth before the appellate authority. So based on all of the submissions, what are the observations that appellate authority would have given is, so just like that mere statement of you telling that a particular expenditure is a capital or revenue expenditure, you cannot rescue with that. So if you're treating some of the expenditure in a book as a revenue or a capital, is your will or it's your discretion. So taking ITC on based of that will not be right, is what the observation the appellate authority has given. So if you see that in GST law, neither they would have, it is prescribed for the taxpayer to follow a particular accounting standard, or there is any penal provision if you have not followed the accounting standard as such. So that is all not prescribed in the GST law. So it is at the discretion of the taxpayer to treat any expenses for that matter as a revenue expenditure or a capital expenditure. So either you capitalize or non-capitalize those expenses. These accounting entries being in a books of accounts can be modified or deleted, or either way it can be altered as well. So based on what treatment you have given in your books of accounts, you cannot take that stand telling that it is a revenue expenditure, so I've not capitalized it, so ITC can be availed on that. So this was observation that was given by the appellate authority. So this is something interesting, because generally we see if we capitalize it, the ITC is not available, is what the act also says. But this ruling specifically tells that it is the ITC is not admissible in respect of any of the goods purchased for the maintenance of mall or for the works contact services. In this, the applicant, while going on to the appellate authority also, they would have taken this case of safari retreats. As sir discussed earlier, one of the laws that is pending in the Supreme Court, and which we have been eagerly waiting for that. So they would have quoted that case also in this ruling. So in that safari retreats, I'll give you a gist of what is this safari retreats. So this safari retreats private limited is basically they would have constructed a mall and they would have let out to the tenant, and for that whether this goods and materials purchased, whether ITC would be available or not, was the thing they went on to the advanced ruling. So the ruling came in favor of the applicant. So the ruling goes on to tell that availment of ITC is available for the construction of immovable property when in the use of course of the business. That is, they would have constructed the mall and they would have let out to another tenant. So in this case, there is another output services. So for that output services, I can obviously avail the ITC pertaining to the construction of immovable property. So this was a judgment that was given in case of safari retreats. So for this is Orissa High Court judgment. For this, the department has gone on an appeal and the case is pending before the Supreme Court. So this is one of the major or crucial ruling judgment, I would say, that has come in the favor of the taxpayer. So this is with pertaining to safari retreats. So put it in very simple. This case that we have discussed earlier, ITC is not admissible even if it is for the maintenance of a mall or works contact is for the works contact services for the maintenance of a mall. So for both of the cases, the ruling has come out very clear that in both the cases ITC is not available. And another ruling, that is West Bengal, this is very recent ruling that has come out in 2024 this year. So in this case, if we see, the applicant what they would have done is they would have constructed a warehouse, and that warehouse they would have let out to another company, and they would be getting rent for that, for which they'll be paying GST. So they just wanted to know, like, for the construction of warehouse, they would have obviously utilized the goods and services for the construction of a warehouse, whether the input tax credit pertaining to those construction of warehouse is eligible for ITC or not, was the question that was put before the advance ruling. So exactly this is what they've asked before the advance ruling, the questions. So they wanted to know, like, whether ITC for the construction of warehouse can be claimed and utilized to pay taxes on the outward supply of services provided by way of renting of the said warehouses, because they're not utilizing the warehouse for their own purposes. They are just renting that warehouse to another corporate, for which they get the rent, and for that rent also they pay GST. So if in that case, whether the ITC can be utilized or well and utilized, in two of the situations they have asked, whether if those construction expenses are capitalized in books or if it is not capitalized in books. So in both of these scenarios, whether ITC is can be availed or not, was the question that was put forth. So in this way, discussion, the ruling that has come out as the applicant is not eligible for the ITC and construction of a warehouse which is capitalized in books. So on the plain reading of the section, they have come out with a ruling that if those construction expenses are capitalized, ITC is not eligible. If those construction expenses are not capitalized, ITC is admissible. This was the ruling that was given by advance ruling. So immediately, what the applicant has done is they've gone on to an appeal. So it has gone to appellate authority. So the case was decided there. So again, what was the observation that was made by appellate authority is that the submission that was put forth by the applicant as well. So here, as we have seen or discussed earlier, the explanation to clause C and D of 17.5 comes into picture for the purpose of construction. That is, the construction includes reconstruction, renovation, or alteration to the extent of capitalization. Was the explanation that is given. So the applicant put forth the question that only if it is pertaining to reconstruction or renovation, this question of capitalization has to be applied. If it is only construction, say if I'm originally constructing immovable property, this question of capitalization should not even come into the picture. So if it is only construction, straight away it is not even eligible. But when it comes to reconstruction or renovation or alteration only, I have to see the extent of capitalization. So this was the stand that was put forth by the applicant as well. So based on all of this submission and discussions, the advanced ruling authority has modified the opinion, ruling that is given by the advanced ruling, telling that the explanation part will be applicable only for the reconstruction or renovation, and the construction will attract only the provisions of clause C and D of 17.5. So ITC shall not be available on the construction to the applicant. So put it in very simple words, for the construction of a warehouse, ITC was not eligible for this applicant. It was a ruling that was given by the advanced ruling authority and the appellate tribunal as well. So this is another ruling on the same grounds. ITC on expenditure incurred against immovable property as a works contract or as a goods and services will not be available to the extent of capitalization. As we have discussed, if it is capitalized, ITC will not be eligible. But in this ruling, they would have not restricted their discussion only to the amount of the capitalization, but they were generally discussed on the whether the nature of the expenditure is capital or revenue. But here also they would have given in ruling that ITC is not available to the extent of capitalization. To sum it up, there are different rulings by different state governments for the different applicants. So with ITC, with respect to construction of immovable property, we should be very clear, and we should have a very clear guidance as to whether we should take the ITC pertaining to the immovable property, because we all know when an immovable property is involved, obviously there'd be huge amount of ITC involved in that. So without knowing or without any proper guidance, if we have availed that ITC, and if we have realized, and even though if we have not realized and subsequently if we have not got notice on that, we will have to reverse that ITC along with the interest also. We should be reversing it. So that comes as a double burden after the notice is being revised. So if we are constructing an immovable property and if there is an ITC pertaining to that, I would suggest you to please get the guidance of an expert or any professional for that matter relating to this construction of immovable property. So I'll show you the sample of a couple of notices that we have received recently for this block credit as well. So if you see this, it is basically the departmental audit. During the course of an audit, the government has raised a query on this block credit, that is for the period of 17-18 to 21. We have availed the input tax credit on certain ineligible goods pertaining to, see, as we all discussed, this vehicle repair and maintenance, vehicle insurance and all that. And after that, see, the construction of building or electrical installation and fitting and charges. So if there is generally any construction of a building or a immovable property, that triggers a notice or that triggers attention to the department. So we'll have to be very careful and we have to look upon that. And this is another system generated notices. This is for the electrical goods pertaining to the immovable property. So if you see, basically they they get the details all of this from GST 2A or 2B. Based on those details, if there is any invoices appearing in our GST 2A, they take the details from that and they give notices to us telling that ITC, you're not supposed to avail ITC on this, but you have availed on that. So one of such notices is this. And same way for this as well. If you see here, there will be a lot of block credits involved in this. That is motor vehicle insurance, maintenance, works contract services. See, there is specifically mentioned works contract for the cement, for the electrical goods, for all of this hardware and all. So once these all, if these are appearing in our 2A or 2B, we'll have to be very clear and we should have the records if ITC is availed or not. If ITC pertaining to that is blocked under 17.5, as sir has discussed earlier, we'll have to show it separately in the GSTR 3B and the 4B1. We'll have to disclose it separately and that has to be reversed. So keeping this in mind, let's be very careful if there is an input tax credit pertaining to a construction of a building thing. This is another notice that we have received for the purchase of motor vehicle, that is pertaining to the clause A. So if we have availed that, ITC also will be receiving notices. So these are the sample notices that I've taken. And one more important thing is they would have, if those ITCs are appearing in our 2A, and say if they have triggered notices and we have not replied and we have not reversed, they would have they would give notices under 74 as well. So 74, if we see, the penalty will be 100%. So equal to that amount of ITC that you have availed plus that 100%, plus upon that interest we will have to pay. So this is an additional burden on the taxpayer to pay all of that once the notice arrives. So as we see, for the time limit for the notices for the 17-18 is for the order passing and for the notices is over, but under 74 they still can issue the order. But for the financial year 18-19, if you see, they've extended the date, that is till 30th of this month. That is 4 days. The time limit will be over for this 18-19. So they can pass order up to that. And but for 74, they still have time. So I would request each and every one of you to look carefully if there is an input tax credit which pertains to the construction of an immovable property, and have a detailed record or have an expert guidance regarding this. So if you have any doubts or queries in this session, kindly post in this question and answer box. We'll be here ready to answer. And if you need any assistance regarding this block credit, please feel free to contact us. I've given the numbers of our admin and support team. You can just contact us. If there is any queries, please post in the question and answer box. Mr. Sankit Daga, can I get a list of blocked credits? So the list of blocked credits is explained under section 17.5. So you can get the list of that blocked credits for which and all ITC is not available. Further, if you need the list, please you can contact us. We'll provide you the list of blocked credits. So Mr. Erumalai has asked a question. Can we take ITC on cab for arranging pickup and drop for office worker more than 13 member? So, sir, as sir discussed, it pertains to the clause A. So, motor vehicle, if it is more than 13 passengers, yes, you can avail the ITC. If it is less than 13 passengers, ITC cannot be availed. So, Mr. Kodishwaran, he has asked whether membership in the name of an unit is eligible for ITC. So, sir, what do you mean by membership in the name of an unit? So, generally, if it is a membership for a club or any fitness like that, ITC is not eligible. Maintenance at factory premises, can we take ITC? So, generally, sir, with respect to lift, generally ITC is not available because it is attached to an immovable property, so that comes under immovable property. So, for lift, ITC will not be eligible. So, can ITC for vehicle insurance and vehicle maintenance can be taken? So, sir, with respect to vehicle, so as we have discussed in clause A, if for that vehicle, on the vehicle, if there is ITC is eligible, that is with respect to this 13 passengers, then for this maintenance also ITC is eligible. And for that vehicle, if ITC is not eligible, then for this aspects also ITC is not eligible. Mr. Krishnamurthy Balasubramaniam, thank you, sir. We have told us it is a very good presentation. Thank you. So thank you, everyone. It was a very interesting and an engaging discussion. So thank you, everyone. Please give us feedback on any of the topics that is to be taken at the later point of time. Thank you once again, everyone. Thank you.